Analysts are circling the charts again, and this time, Shiba Inu sits right on the edge of its strongest support. After a brutal 20% slide this month, price is finally showing signs of life as buyers step in at a critical demand zone. But is this the start of a real rebound, or just another trap before the next leg lower begins, waiting patiently beneath for traders watching candles? Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. In recent days, multiple market trackers have highlighted how Shiba Inu has spent November under heavy pressure. It has printed 4 consecutive red weekly candles and lost roughly 20% since the start of the month. Yet the latest reactions suggest that the market is not entirely broken. After sinking toward a local low in the mid-700 units region, Shiba Inu met a demand band roughly between 741 and 767 units, and buyers finally stepped in with enough force to produce a bounce back toward the low 800s. At the same time, broader analyses point out that this support defense is happening as Shiba Inu trades near a major yearly low. Price recently gravitated toward that long-standing floor, while on-chain data showed a sudden surge in token burns, and ecosystem headlines pointed to new use case integrations like a debit card that lets users spend Shiba Inu and earn rewards. With price hovering around 810 units, daily trading volume near $136 million, and a market cap around $4.7 billion, the asset is clearly depressed but not abandoned. Technical outlooks from dedicated research desks add more structure to this picture. For November, Shiba Inu is expected to oscillate between a support zone around 750 units and resistance near 860 units, as long as it remains capped by heavy moving averages overhead. This means the token is essentially labeled as cautiously positioned for rebound, but only if bulls can continue to defend support and gradually fight back above the cluster of averages in the 800s and low 900s region. Zooming in on the latest event, the sequence is straightforward. Price slid along a descending channel, revisited its lower boundary on the 4-hour chart, and finally tagged the mid-700 units area, where earlier projections had placed the next major demand zone. Instead of slicing through, Shiba Inu reacted sharply, with candles bouncing back toward about 803 units. Some analysts interpret this as classic absorption, where remaining sellers are met by patient buyers who have been waiting for a deep retest before committing fresh capital. One trading specialist goes further, describing the present zone as a buy opportunity. In her scenario, as long as candles continue to close above that 741 to 767 units band and the broader market avoids another sudden shock, Shiba Inu could attempt an 11.2% relief rally toward roughly 890 units. She still labels the overall structure as bearish, but characterizes the potential rebound as a healthy pump inside a downtrend, not a new bull market. For traders, that distinction matters. It sets expectations and prevents overconfidence. The rest of the market has not been kind. Intraday analysis shows Shiba Inu moving slightly lower over the last day, failing so far to claim any new highs and risking further tests of the same support levels if selling pressure returns. On the weekly view, there is still room for an extension into the high 600s should the current floor fail. Meanwhile, other commentators note that Shiba Inu recently touched the 700-unit mark, a level not seen since late last year, before staging only a modest recovery. By their calculations, the token is down more than 20% this month and more than 70% compared to 12 months ago. Overlay all of that onto the global environment, and the challenge becomes clearer. Over the past 6 weeks, more than $1 trillion has been erased from the digital asset market as investors trim exposure to high beta sectors in response to interest rate uncertainty and slowing growth. In such a climate, even attractive technical setups must work harder to succeed, because there is simply less speculative capital ready to chase every bounce. Shiba Inu's attempted rebound is happening against this headwind. On-chain and indicator data, however, give the bulls a few talking points. Burn tracking services show that Shiba Inu's burn rate has jumped sharply, at times spiking by more than 800 to 1,000% in a single day. A large number of tokens have been removed from circulation just as price is trying to stabilize at long-term support. Supply reduction alone does not guarantee a turnaround, but when it coincides with strong defense at a key level, it can tilt probabilities slightly toward accumulation rather than forced selling. Indicator readings reinforce the idea that the market is stretched but not yet healed. Oversold relative strength index values near the mid-30s suggest that recent downside has pushed Shiba Inu into a zone where relief bounces become statistically more likely. At the same time, the token still trades below a stack of moving averages, with shorter-term lines sitting around the low to mid-800s and heavier ones higher still. Nearby technical supports cluster around 750 and 707 units, while resistance levels are mapped in the high 800s and beyond. Until price can clear that overhead band, any move will look more like a counter-trend rally than a full momentum shift. All of this leads to a nuanced implication. On one hand, price is clearly stretched to the downside after weeks of selling, and the strong reaction around 741 to 767 units suggests that determined buyers are finally engaging. Combined with spiking burn rates, oversold signals, and ongoing ecosystem work, this creates a credible base for a short-term rebound. On the other hand, the longer-term downtrend and harsh macro environment both remain in place, and deeper levels around the high 600s and even 700 units cannot be ruled out if support fails. Within the community, that split is obvious. Some traders see the current zone as a textbook chance to position for a bounce, especially with analysts mapping clear invalidation levels and realistic upside targets. Others focus on the fact that Shiba Inu is still massively below its all-time high and is moving inside a broader market where risk appetite continues to shrink. Long-term holders, for their part, emphasize that development, burns, and adoption remain the real long-run drivers, arguing that short-term volatility is simply the price of participating in a speculative asset. Looking ahead to the coming days and weeks, the roadmap is relatively clear. If buyers can continue to build a floor around 750 units and push price above the mid-700s with momentum, Shiba Inu could attempt a move into the 830 to 880 units region. That zone would serve as the first serious test of whether this is just a reflexive bounce or something that can evolve into a more durable trend change. Breaching the heavier resistance area toward 890 units and beyond would strengthen the recovery case. If, however, Shiba Inu fails to hold the lower band and daily or weekly candles start closing decisively below the existing structure, the narrative flips. In that scenario, the market would likely reframe the recent action as a simple pause before further downside, with attention shifting to whether deeper supports around the high 600s can hold. In a still fragile macro landscape, that sort of break could trigger another round of risk reduction from traders who have already endured months of choppy declines. The balanced conclusion is that Shiba Inu is genuinely positioned for a potential rebound, but one that is conditional and fragile. Support has held so far. Burn rates are higher. Some analysts are openly calling the current level a buy zone with well-defined targets. Yet none of that erases the reality that the token is deep in a longer correction and still exposed to macro headwinds and technical failures. The opportunity exists, but it must be approached with discipline rather than blind faith. Shiba Inu has survived another test, but the real verdict still lies ahead. Support is holding for now, burn activity is rising, and analysts are divided between cautious optimism and another downturn. As new candles print and fresh data appears, remember that no level is guaranteed in this market. Stay patient, stay informed, manage your risk carefully, and we'll keep unpacking every move together, step by step, faithfully and clearly. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.